Hello, everyone, and welcome to episode 79 of Two Amazon Sellers and a Microphone, brought to you by Solozo. Today, Kris and I are pumped up. We've got a great guest with us today, Richard Starkey from CronosNow. Richard, how you doing?
Yeah, good to meet you guys. Good, thanks for having me on the show.
Absolutely. Yeah, this is we're glad to have you on for sure, because this is something that we haven't touched on much, and this would be really good for all the people that are listening, all the sellers that are listening, just talking about accounting for your business. Probably not the most sexy topic you can pick, but it is super, super important. And I'm excited to talk to you because I know there's a lot of things that sellers are missing out on, and it's a huge piece. So we're glad to have you here. Tell everybody where you're located right now, because we were talking about this before, and Kris and I are kind of jealous.
Yes. The great thing about being a modern day accountant is we can do our work anywhere. So I'm currently looking out my window up the mountains in Rizan Kotor Bay in Montenegro, man. So,
oh my gosh, that's awesome.
Can't complain too much. Yeah.
Oh, we're here in rainy Kansas City, so we're jealous of that. Oh man.
Well, look, we've got a few downfalls of the place. It's a bit like living in the 80s. There's no McDonald's, no Starbucks, nothing like that. But yeah, can't complain. It's the most beautiful place I've been, and I've been quite around the world. So absolutely amazing.
Well, I'll definitely have to check it out for sure. Well, well, let's dig in a little bit. Richard, why don't you tell everybody before we get started talking about the accounting for sellers, why don't you tell everyone a little bit about your history, sort of how you got started, and what made you take this avenue sort of to help e-commerce clients? So I'll let you tell your story.
Cool. I think the quick elevator pitch version of it is, became a CPA chartered accountant equivalent back in South Africa, 20 years ago. Worked up to audit partner, became a very banker, mergers and acquisition kind of guy. And 10 years ago, landed up as an accidental CEO of an online education business. And in that business, just built out systems, specifically around the finance operations. Education is a very finance-driven business. Sold that up and started up CronosNow, moved to Montenegro, became a bit of a nomad, and just focused on online sellers, right? Was really fascinated by the tools available due to cloud accounting specifically, and artificial intelligence in terms of document reading. The type of systems that we build out now for Amazon sellers would have cost us hundreds of thousands of dollars to implement 10 years ago. Now you can do it for a couple of $100 a month. It's absolutely amazing. So enjoy it, and love working with small businesses. And you guys know more than I do what Amazon sellers have as an opportunity to build out a business from their garage, from their home office. We've never seen anything like it, right? So yeah, just exciting to be part of people's journeys as they grow their little empires and abilities to support their families.
Yeah, well, you're spot on. It's and Kris and I talk about this all the time, and that's why it's nice to have you on the show. Is just all the things when you start this business. Kris and I were sort of the same way. We started it as a side hustle, but then it quickly turned into a real business. And then you realize, oh my gosh, there's so many aspects to this. I mean, we are with Solozo, we're talking about advertising, and that's just one piece of it. Super complicated. And then of course you talk about all the other things, inventory management. And then I think a piece that gets lost in the shuffle a lot, and at least for me, I know I go and dump a bunch of stuff off to my accountant, and I know he wants to murder me. It's something I could probably do a lot better with, but just hand him a big file. He probably wants to kill me. But accounting is super important. Understanding where your business is. And then, of course, we've been talking to a lot of people right now. I mean, a big thing in this space is exiting. People are selling these businesses. And if you don't have all that stuff lined up, your accounting, it's pretty hard to present your business to a buyer. So let's talk about just if someone wants to work with you, what when they get started, what makes you different than, let's say, going to your local accountant that does accounting for any kind of business? What makes you different?
So I think what the accounting world overall is a lot of the manual work that you used to go and take to your accountant or CPA. That's no longer a hugely time-consuming process for my team. Right? We've got tools that read all your supplier invoices and can do most of the work for you. Bank feeds are already feeding into things like Xero and QuickBooks. It's amazing how quick and automated it is. But what a specialist does in any industry is they're able to really understand all the ins and outs for that industry. So there's a practical side. Picture a CPA who is sitting down with your Amazon report. Picture your 2 payouts a month and those thousands of line items in that TSV that are behind that summary report twice a week, that payout report. Now you've got 2 ways. Either you're going to have a CPA who just doesn't understand that, and what they do is they take that net amount, dump it into revenue or sales. That's not revenue or sales, so you don't get accurate numbers. Or you're going to have a CPA who's pedantic, and they're going to try and record all those individual transactions as individual orders in Xero, and you only get a bill for $10,000 at the end of the month, right? Because it's a man-hour driven approach. So because of the great tools like Margin Driver, A2X, we understand how to get that Amazon data into the bookkeeping like in a matter of a few minutes a month, right? So the practical time saving is one aspect, and then understanding what drives your business. Now, most Amazon sellers, most small business owners don't even look at their income statements and balance sheets. It's a tool for tax returns, right? You're going to have some type of dashboard tool that's reporting on your SKU level profitability analysis, etc. But that's not giving you the full picture of your business, right? So for our guys, we've developed custom reports to make the income statement really useful. But what we do is we also spend the time coaching you on how to use them and what it means. So we've all heard the adage, profits don't equal cash flow. So guys are, geez, my CPA is telling me I've got profits, but I've got no money. Where's the cash? Right. Well, you're busy growing. You've got to understand working capital. So what we do is by automating so much of the back end, we're able to just add so much value into that Amazon seller's life. And the difference is I've got my own Amazon store. I've got my own Shopify store. I've got a couple of these investments that are my side hustle, but I've got a business partner who knows how to do the really difficult stuff, the stuff you guys do, the advertising. And everyone in my business is also a seller in some form, right? So they understand what our customers' needs are. It's not an external bookkeeper who doesn't speak your language. So I think that's our kind of big driver. We're able to add real value because we understand what a seller needs from those finances.
I like that you said that most of the team is sellers that have been in the space before. They understand the background. Yeah. They understand how Amazon works. But you're right. Like Dustin mentioned earlier, this is an area where I immediately my eyes glaze over. I don't even want to talk about it. I hate it. I refuse to get involved with it. I just hire somebody else to take it up because sellers. This may be a majority of them are more worried about. Majority of us are more worried about finding new product, launching product, trying to rank. When somebody comes to you, when a seller comes to you, is there an audit process that takes place, or what's the first process that happens if I come to you and say, Richard, I need some help with accounting? What do you guys do then first with my account?
So before that, I need to understand that I kind of have 2 boxes for my clients, right? So is something scaring you, or are you hopeful about something, right? So guys that come to me and they need this done, the account's done for tax returns, right? They're behind on sales tax, or they've on income tax. They have forgotten that Amazon doesn't do your Florida sales tax for you. So suddenly they got a big nasty bill. There's something that's chasing them. There's a big stick and they need my help, right? That's one customer who comes, and generally, they're the minority for us. We generally work with the guys coming and he's got a 5-year plan. In 5 years, he's heard about the Amazon aggregators. Always trying to, we look at those as, let's call it our hope clients. So guys who either want to build, exit, sell, or they're seeing this business as something that they're trying to build onto autopilot to create an annuity income, right? So instead of doing your 401 in shares or retirement annuity, build out a couple of Amazon stores, maybe a couple of Shopify brands. Those give you something which you get a much higher return on your investment. So either way, then we have got a very different set of kind of reports and how we treat that customer versus the sales tax customer, right? Customer who just wants to come in and get the taxes done, it's all about compliance, it's about speed. And then we hope that within 12 months, we would have had turned him or her from a fear client into a hope client, right? All our clients, we want to just be able to say the accounts are foundation. They're going to help you make a better decision in running your business, understanding working capital. It can help you grow your business, i.e. get your funding through AccrualMe, seller funding, whatever it is. And then obviously, if you're going to exit, what are the aggregators looking? We've got relationships with a few of the aggregators. If you're not doing proper cost of goods on accrual basis, you aren't going to get a sale done, right? I've had one conversation a month ago. Someone came in, cost of goods sold was not being recorded properly, therefore their profits were all over the show, right? It was picked up by changing that discussion, getting the correct number. The purchase price was 40% higher for them. Could have gone the other way around, right? Because your cost of goods sold is dependent on a couple of things. But if you're just putting in a number into an aggregator's kind of financial model, you want to make sure that's the correct number and you can argue for maximum value. The other thing that's also important, what we try and audit is we also want to understand the business model. So someone on Amazon who's doing retail arbitrage, selling brands that already exist, are not spending a lot of money generally on PPC, right? So they're not advertising. Versus someone who's got their own brand, their business model is driven by advertising. So in an earlier stage, that advertising ratio compared to profitability, giving that return on advertising spend, is a number I obsess about in our reporting, which I find most people don't think about in the correct level. Hope I'm making some sense.
No, yeah, for sure.
Yeah. Yeah. Go ahead, Kris.
Yeah. So I'm looking at Xero is a tool that that I've been using just because I found it. I like the way it's set up. I like the platform, the UI, and the dashboard. I'm looking at your site, and it looks like that's something that you guys integrate with. Is that right? Xero, and you guys will integrate together, and it makes it a little bit more of a smoother transition. Is that correct?
Yeah, so it's a slightly different context. What Xero is the accounting software, right? So Xero and QuickBooks Online are the two big ones. And guys, I'm a Xero guy. I don't really care if you're a Xero or QuickBooks guy. A system is a system for accounting. You can make them both work. We ditched QuickBooks because you need to specialize as accountants in one tool, right? So Xero is where all the accounting happens, but then Xero doesn't talk to Amazon or any of the e-commerce platforms directly, right? So what needs to happen is Amazon needs to be connected into Xero, and there's multiple different tools to do that. The one most guys use is A2X accounting. Basically, these tools are taking all those hundreds, hopefully thousands of orders, that you're doing in your Amazon store, and it splits out, aggregates all that information and pushes it to Xero, not in terms of thousands of transactions, but in terms of one journal or one invoice that it puts into Xero and classifies, sales, refunds, promo, FDA fees, Amazon fees, all correctly done in a reconciled way. So A2X is kind of the most used. I've changed my whole firm from A2X to Margin Driver now. If any of the guys, I can give you guys, if you want to share out with your users, Margin Driver's got a 2-month kind of free promo, 2 months free trial, which is great. The reason why there's a bit of a move is there's a couple of tools now that pop up that are like A2X that aggregate all that Amazon info and push it to QuickBooks or Xero. Margin Driver with Agility, there's a couple of them, but some of them are now adding extra tools, which great reporting dashboards, profitability dashboards, hence why we chose Margin Driver. So that's the real tool that's e-commerce specific. Xero is an accounting tool. It's just great to use online. It's really, it makes my life quicker and easier, and therefore your invoice cheaper.
Yeah, this is stuff I need to learn more about. I mean, I'm guilty. Like I'll just, I mentioned earlier, we just like to launch products and get products to rank and make new listings. I have something running in the background, but if I ever wanted to sell, I would have to really start to get this going the right way, because it's probably a mess. I'm pretty sure.
Yeah. Which I'm sure helps, Chris, is looking. Is the I'm not sure if you use some type of profitability dashboard when you launch your products, right? But having all the costs, including shipping costs, fulfillment costs, all done on an SKU level basis, I'm finding is a hugely beneficial tool. And to be able to set up let's call it a deficient order cutoff. For some sellers, they might only want to know about orders that are loss making, but some of them you might want to say you want a 20% ROI on every order, or 40% ROI. And you don't want to report and go and look at all of them. You only want the system to tell you which ones are not meeting that criteria, right? So something like setting up a margin driver, there's a few dashboards that do this. But imagine you log in every day, you get a system that pops up and says, here's the 10 orders from yesterday that were deficient. Tells you why, right? That's the real power in the reporting dashboards, which Xero doesn't do. That's margin driver.
Okay. That's good to know. I got it pulled up here. I'm going to check that out. Yeah. And I have something in my back pocket that does SKU by SKU. Solozo does that. We do that. So that's kind of nice. Like I get to see my margin per item and what my profit is per item. So that's helpful. But like, diving in deeper and going to the next level, that's where I lack. That's where I'm lacking.
Yeah.
I think a lot of sellers do that because, again, we're focused on launching products. We don't really want to add this now because it's not fun to do. It's just time consuming. But you mentioned the aggregators. They're looking at your numbers. They want to know what your profit is. And if you don't have this tied up, you're just going to keep spinning your wheels, and you got to get this figured out. Or your closing time is going to be longer than the 40 days or whatever that it is. So it's definitely
you might
something.
Get the wrong number, right?
Yeah, you might get the wrong number, and it's something I need to be more I guess passionate about or more serious about is really what I need to get involved. But it's just a topic that sellers just don't want to talk about. They hate it.
But Chris, it's something that all my successful clients don't worry about their accounting, right? What they do is they pay someone else to do it. It's the tail wagging the dog, right? So I get very concerned when customers are phoning me and they're doing maybe 10 grand a month, right? And they're worrying now about setting up big accounting systems, or they're wanting to do it themselves and they're phoning some advice. Man, don't go spend 50 hours learning how to do margin driver or A2X and set that up. Go figure out how to launch products and sell stuff, right? You're going to pay someone $180, $200, $300 to do your accounting. What's best use of your time, right?
Yeah, that's a good point.
Yeah.
I completely agree, and we talk about that all the time on this podcast. Is stick to what you're good at, stick to what you love to do, and don't bog yourself down like wasting a bunch of time trying to learn accounting. Same thing with PPC. I mean, if you've got lots of products and you're running a bunch of ads, PPC is complicated, and you could spend hours a day on it. So if that's going to take away from your ability to research and launch new products or focus on your brand or whatever, then you're right. It's a terrible allocation of your time when you could fairly affordably take care of it. So I'm looking on your website again. For everyone who's listening, it's CronosNow.com, CronosNow.com. And it's really fascinating. I'm looking at it's on the how it works section, and there's a lot that you guys are doing. I mean, it's much more than just accounting and bookkeeping. There's a lot of consulting and help on here. So talk about inventory management. How do you help sellers and e-commerce people manage their inventory better?
So from an accounting perspective, this split inventory management into two things. There's the operation. It gets very complicated if someone's multi-channel, right? So imagine you've got an Amazon store, Shopify store, Walmart, and then you're also selling on something like Etsy, or trying to make sure that not just the pricing, but that the inventory quantities are correct on all the platforms. That's a challenge, right? There's some great tools like Sellbrite, and there's 101 tools now that link that up. from an accounting perspective, right, what we need is cost of goods sold needs to be an accurate number on accrual basis. When I say accrual basis, if you're selling an item in this month, I need the cost for that item to be recorded in this month. Even if you purchased inventory 3 months ago and it's been sitting in a warehouse, right? So what we try and do is we try and keep it simple. Most of our customers come to us with some form of inventory system already where they're trying to get the different platforms to have the correct inventory number, right? And they've got some type of system that gives them costing on that system, right? Now, half of them also, however, have a little warehouse in their garage, right, where they keep a whole bunch of their inventory, and that's not on any system. So what we do is we look for the gaps in the operation, but what we're doing is using Margin Driver, we can give you accurate cost of goods sold, right? Because Margin Driver links up with that accrual system. And then the inventory system gives us an inventory balance at month end. So we've always got this control back to like a stock count, right? So we make that process as simple as possible. And we've got that very wrong in the past. I used to do detailed inventory systems and it would cost 10 times more than what I would do now. And because the person's not doing the stock count of what's in their garage, the numbers are slightly wrong anyway, right? So our big thing there is to look for gaps, how their systems are currently not working, and then making sure we get the inventory and cost of goods sold accounting done correctly. That's step number one. Based on all the experience of what we've broken in the past for our businesses, we then also will just consult when someone says, listen, I'm running on spreadsheets or, spreadsheets and hope. We'll try and specify which inventory systems and a process for them to make that inventory system work. And that could be different. If you're a manufacturer, if you're making your own product, there's great tools like Katana MRP, which will help you get the actual costings right when you're making the inventory and to use it as a tool to manage the production. If you're buying and you're importing, say, from China, right, you might pay a 40 or 100% cash deposit, but the product's only going to be in your warehouse in 2 months' time, right? How do you account for that? How do you get that into your systems and drive towards your channels? So we can help with that setup as well. But to be honest, most of our clients come in with an inventory system already in place. We just make sure we find the gaps and audit it.
You mentioned the warehouse in your garage. You're talking to two people that definitely have that, amongst other things. And that is interesting about the inventory. I think I'm lucky in one sense that like 95% of my business is on Amazon. So, I have a Shopify, I sell on eBay, Groupon, all these things, but they're, it's not an enormous amount of sales, but not managing inventory right. And you're right, counting it in your garage or any of that. I mean, I was doing it with like Post-it notes. You'd have a little box. Here's what I've allocated these for Shopify. But then, I've had so many times where I'd get an order and I didn't have the inventory available. So managing that is really important. What about managing like when to buy inventory and when? Because I know, when you're doing your taxes, that whatever your inventory, you can correct me if I'm wrong. At the end of the year, whatever you have as inventory counts as assets or income, or how does that work? And if you have too much, it's a bad thing. And how does that work exactly? When's the best time to buy inventory?
So look, let's assume the majority of your Amazon sellers are small businesses, right? So they're in the threshold where they're allowed to do cash accounting. They don't have to do accrual accounting. So what we do is we can report in the same set of accounts. We can throw out an income statement based on cash accounts and on accrual accounts. For decision purposes, only accrual accounts, guys. Like cash accounts, your income statement is purely for an income tax return, right? So let's talk accrual accounts. In a perfect world, you're doing accrual accounts. So accrual accounts, that cost of goods sold, you have inventory, which lands up on your balance sheet when you purchase it, right? If I talk debits and credits, debits, you make the asset bigger, credits, bank or payable, right? Then what happens is when you are selling those products, the product leaves the warehouse. You take that item out of inventory and turn it into an expense, right? So then what you've got is you've got a consistent gross profit line. Your profits are consistent. Selling price for every sale, cost of goods sold for every sale in that period. Right. At the end of the year, for a small trader, right, who's allowed to do cash book accounts, what I have found is quite a useful tool is to say, listen, we're going to do cash books. And if you've made some profit and you don't want to pay taxes, what you do is you buy inventory just at the end of the year. You make sure the payments are gone off your books. But remember, next year, you don't get the deduction again, right? So next year, your profits will be overstated. So it's just kicking the can down the road. So I generally will try and avoid that scenario. I generally try and get cash books out the way as quickly as possible. So when you're accrual accounting, right? If you buy it at the end of the year, beginning of the year, it's not going to make a difference, right? What you don't want is to spend all your cash on inventory sitting in inventory on the balance sheet, and now you've got no cash to pay your taxes, right? But if you're planning properly, what we should be doing is looking at your profits every month, every quarter, and you should have an extra little savings account. We give you an estimate of what your income tax for the year will be, and you're just putting that amount away and either paying it across to the IRS or you're putting it into a savings account. So there's no surprise when you get to 15th of March or 15th of April, right? But there's a lot to the tax planning, right? It depends. That's where we also get quite involved. Tax planning can also come down to things like are you running an LLC with flow through, disregarded entity, or are you running an S Corp? There's a couple of planning tips around that, which are also probably worth a discussion.
Yeah, let's do that. Well, when you set that up, because I just went LLC, but there's advantages there, right? Like on what classification you do. If a seller is starting out and they're trying to, incorporate or whatever, what classification do you recommend them go after?
So when you're starting out, right, it's assuming it's a side hustle, right? Even if it's your full-time business, LLC, single member, disregarded for tax, right? So when you're starting out, up until my clients, I say $100,000 in profit, right? Up until then, LLC, flow through, do not worry about an S Corp, right? Once you're doing 100 grand, some people will tell you as low as 50, 60, or 70. When we do our maths of the extra costs of running an S Corp versus an LLC, it's probably more closer to 100 grand, right? So when you're an LLC, first of all, you're only filing your one income tax return, right? So it forms part of your income tax return. You've got until the 15th of April if you're in the US. And your CPA is going to cost you, I can give you kind of cost, your CPA is going to charge you around $500 for that return, right? You're doing a Schedule C, not too bad. But remember, on that, you've still got to be doing your self-employment taxes, right? That's 15 point whatever % for medical and Social Security. So when you start making closer to 80, 90, 100 grand, what you're going to do is then you register and you convert and elect to do an S Corp. And what you're doing is you have to still pay what's an acceptable amount as a salary. So let's say you're paying yourself 30, 40, maybe 50 grand of that 100,000 as a salary through payroll. You're paying self-employment taxes on that. The amount above that, the 60 grand above that, that cuts to 100, that you're taking out as dividends, right? So you're not paying the self-employment taxes. That's the big difference. But as an S Corp, you're now filing 15th of March. Your tax return is probably going to be $1,500, right? Plus, you've got to have someone administer a payroll for you every month. And you lose a couple of the Schedule C kind of benefits, like the home office deductions, et cetera, et cetera. So we find generally closer to 100 grand, then it's worthwhile because the cost of compliance that increase on an S Corp, then it makes sense to do. And tail wagging the dog, guys. Like, S Corp means extra tax returns. Now you got to do a business tax return and an individual and if you're paying offshore contractors or you're doing your W8BNs and whatever else, it's a huge amount of paperwork that makes you want to drink.
This is fascinating to me, and this is why, I mean, if you're taking this seriously, why you should be taking advantage of all that, like this advice and these services, because this can make a huge difference for you. I mean, just listening to that about that cutoff of when it's a good time to maybe go to an S corp. That I learned, that's something I learned from this, and that's really interesting about just those breakdown of numbers. That's something you would never do if you were trying to do this on your own. Try to research this through. The other thing that makes me want to drink at night is when we were. This is something that Kris and I have talked about before about expanding into other marketplaces. It's something that we tested out, never really did full throttle yet. But once we do that, then there's all kinds of accounting headaches. I feel like VAT tax, all that stuff. How do you help out sellers with their VAT taxes and planning for that and paying them and et cetera?
So I just want to clarify one thing. So from our side, we've got clients around the world, right? So there's stuff that we do in-house, the bookkeeping, accounting, setting up zero margin driver, that's the skeleton. There's a whole bunch of stuff that plugs into that, right? Income taxes, sales taxes. In the UK, there's a whole bunch of financial statements and company house submissions that those guys have to do. In the US, your LLC annual filings are pretty easy. It's not what, but what we don't do is we stick to what we do, adding advice, support, and building the system. And then we've got a network of partners for anything that requires a form, a signature, and a submission to a government department. We don't do any of that in-house, right? So a lot of our clients come to us. People are very loyal. Most of our clients have had the same CPA for 10 years, or it was their father's CPA. They do the taxes. They understand the intricacies of their own state. We work with that CPA, right? So CPAs aren't interested in doing what we do, really. They don't make, they just can't do it at the cost we can, right? So we work with them, and then what we do is we'll pick up from our network of CPAs, our research. Geez, are you doing this deduction? Because this is something big for Amazon sellers. They go, oh, no, we haven't thought about that. Then they go off and do it. Sales tax, and if you're talking sales taxes or back taxes, geez, you've been selling, you've had a Nexus, and suddenly you got a letter from, Florida saying you owe us $10,000 in back taxes or sales tax. What do? We've got specialists, because sales tax in different states is really weird. So instead of going and filing 8 quarterly returns, you might do a voluntary disclosure program, right? So our sales tax guy might charge you $1,000 to do that, but it's a lot cheaper than doing 8 times $150 individual tax returns. But in that state, does that state take anything other than actual physical written checks? No. So you can't connect and pay from your bank account. So we've got, let's call it the troubleshooting. We've got 2 kind of sales tax and LL and incorporation specialists that we use. They've just seen, they live, all their work every day is when something's gone wrong, right? They've got that, so they know how to fix, and they've got contacts in all different states. What we do is, for sales tax, we help our customers know when the Nexus points are being arrived at, and we must come back to warehouses in a moment on Nexus. But then we set up a tool. We've moved everything across to Avalara, but TaxJar is great, Avast, all these tools that help you manage and file your sales tax across the US. And then also in the EU and the UK, VAT, GST and VAT in Canada, etc. So again, that's our partner for that, but you've got to know how to set it up, and you've got to know when to set it up. And then we've got little specialists. If an Amazon seller is selling in Europe, good luck. It's quite tough, but we've got a great guy in Germany that we use, and he's gets your VAT sorted out, right? But we have to provide him then with all the numbers so that he knows what to fill out in the return. So what I just find interesting is guys will phone me saying, geez, I haven't done my sales tax. I've got a nasty letter. Can you help me file it? Okay, cool. Have you done your bookkeeping? No. Like, do you want me to make up numbers? You can just make up numbers and write them yourself on the form, right? It doesn't. So yeah, that's the, think of it, the skeleton, and all the really smart people. We're just good at doing what we do. All the really smart legal brains and tax brains plug into us.
That's great. I mean, just having that network and knowing where to go. And you mentioned something, and because this will be good for people that are maybe starting to sell. Anyone who's listening to it right now, is the concept of Nexus. When I remember Kris and I both started selling in 2014, And then when you realize you put your inventory into FBA, and now all of a sudden you've got a nexus in like 45 states, that's a little overwhelming. Explain to everyone what Nexus is and how you can make sure you're taking care of it.
Cool. So if you're selling just on Amazon, and you're just starting out, don't let this stress you out. Just keep an eye on your Florida sales, right? That's the only, and if you start getting to like 200 sales a year in Florida, call someone like me, right? Don't let it stress you out. But if you're selling multi-channel, right? So you've got a Shopify store, any store where you are responsible for charging, collecting, and paying sales tax, right? Then this next 2 minutes, I'll try and keep it to 2 minutes, applies. So Nexus means that, first of all, you charge, if I'm saying you've got Nexus in a state, it means you're charging sales tax to a customer in that state, okay? It's not about where you are, it's about where your customer is. That's the first thing. So Nexus is more complex. I'm giving you an overly simplified version here, but you've got, in essence, physical presence Nexus, i.e. you've got a business. You've either got your warehouse, you've got staff, etc. in that space. We'll come back to about whether an Amazon FBA warehouse means you've got physical presence, right? So let's say you've got inventory and you're running from your house. You've got physical presence Nexus in your state, right? So generally, that's the starting point, right? The next question is, maybe you've got a couple of pre-FBA warehouses, specifically now with all this COVID, inventory restrictions. They're keeping the numbers down in the FBA warehouses. Many of my clients are setting up 3PL providers. They're using my FBA Prep, Deliver, Proxy FS. They've got all these different places set up. That is a bit more of a gray area now, right? So if you've got inventory in a Amazon Prep warehouse, do you have physical presence? The clear reading in almost all the states is yes, right? So let's say you've got a warehouse in Cincinnati. Cincinnati is a good logistics center for the Amazon guys. So some of the 3PL warehouses are pretty good there, right? So you set up your warehouse using a 3PL provider. Well, technically you've got Nexus then in Ohio. So all your customers in Ohio, you should be charging sales tax to. Now in Amazon, Amazon's already charging, getting it and paying it across for you. You don't have to worry. But if you've got a Shopify store or a WooCommerce store as well, now you've got to start adding and saying to all those customers, I'm charging you sales tax. So here's a little trick, is don't start doing it until you're registered, right? So until you've actually registered for sales tax in that state, don't start charging your customers. Okay, it's illegal. Sorry, I'm turning a heater on, I'm freezing. Montenegro is great weather except for this week when it snowed. So choosing your warehouse, your pre-Amazon warehouse, a strategy I try and make sure my customers think about is if they're doing high volume, can you choose one state, if you're multi-channel, and a state where you're not selling a lot to customers, right? Okay. So you don't mind, you just don't want to be, let's face it, most of our customers are going to be they're going to price point you against someone who's not charging them sales tax, right? They're getting hit with the sales tax. For them, it doesn't matter if it's a price or a sales tax component, they're paying extra. So that's something interesting. And also consider whether or not your 3PL providers really need to be in 5 different locations throughout the country, right? If it's a pre-FBA warehouse. If you're selling a Shopify, well, can you take an extra day to deliver and maybe have a little bit more in terms of UPS or FedEx? It's worth considering, because sales tax, every state you're in $300 to $400 for registering, and anywhere from $100 to $150 per quarterly filing per state, right? Now you could be maybe as low as $80, but it adds up, right? Plus you need software to keep track of all of this. So that's physical presence Nexus, I think, in a simple way. You've also got to link that back to some of the thoughts around, where you register your LLC versus where you live. I know I've got customers in California who don't want their LLC in California because it's an $800, like they're going to get nailed $800 to set it up. So they want to set it up in Wyoming. But guess what? Then you're going to get charged income taxes in Wyoming and California, even though you've only got an LLC in Wyoming. So don't be, what's it, penny wise, pound foolish, or whatever it is.
Yeah.
I make up sayings as I go. That's a terrible one. The next part of Nexus is your economic nexus. Now, go back 10 years ago, e-commerce was not an issue on the sales tax laws. Were not worrying about e-commerce. What did happen? There was the catalog and mailer businesses, which were starting to raise some concerns. But then basically what happened for almost all states, they came up with this 200 transactions or $100,000, right? That was your nexus or threshold. So if you did 200 transactions into a state or $100,000, well, then you had economic nexus, a threshold. You met a threshold, therefore you must register in that state. Now that's just not practical. Let's face it, most of us selling on Amazon are not selling items, for $1,000 a piece, right? Or $500 a piece. It's going to be sometimes as low as $10, $20, $50, $100, right? So 200 transactions is next to nothing. Now, a state is not wanting you to come and fill out a tax return, a sales tax return to pay them $50 in sales tax. Like, it's not worth their time, right? So most states are doing one of two steps to remove this kind of crazy, 200 items sold in a year threshold. First of all, they're either changing it to 200 items and $100,000, right? So if you've done 200 items but not $100,000, don't stress. And some of them, I think California is like, don't worry about quantity, make it $500,000, right? So when my guidance to any multi-channel seller, if you're an Amazon seller, just keep an eye on Florida, right? If you're a multi-channel seller though, and you're starting to sell across Amazon and your other channels, if you start getting to 200 items in the year, jump onto Avalara, TaxJar. They've got great little tools on there for free, and just type. So you've got 180 sales in North Carolina. Jump on there, see what is the nexus, right? Just go sales tax North Carolina, it pops up. And when you read down, if you see $100,000 or 200 transactions, then you've got to think about it. But if you see 100,000 and 200, don't even worry about it. Or if you've got like a 200,000 only value or 500,000, then don't even worry about it. That's the most practical. Before you go spend money on Avalara and TaxJar and a TPA to go and do a whole bunch of work, that's your threshold.
Yeah, TaxJar is great. That's what I use is TaxJar, and I'll tell you, having Amazon collect now in almost all the states except Florida is certainly helpful. That was not the case a while ago. Amazon sellers had Nexus everywhere, and you were on the hook for sales tax, and there was all this gray area about did you really have a Nexus or not with this. Having the marketplaces do that for you is so much better now. But I mean, even that, you don't think about when you sell on other channels how now you bring that back in. And what if you're fulfilling your orders from FBA for your Shopify orders? Do you have a Nexus now? Those kinds of things. There's all kinds, but this is. I mean, just having this conversation, understanding the things. I mean, where we don't realize how we could help our business is super important. I highly recommend everybody reach out to you that is looking for this kind of service. And if they want to, how do they do that? How do they reach out to you?
The easiest is to jump on our website, and there's a book a strategy call. It's plastered all over the website, the contact us page. And what that does is it books you a 45-minute call directly with me or with one of my business partner, Karen. And we'll chat through. And I'm happy to share. I book out a certain number of hours, about 10 hours a week, just to help even startups, right? So there's no obligations. Just share this kind of information. That's the easiest way. I think an email only gets me a bit of information. So jump on the site, book some time with me, have a chat. I think that's the easiest.
Absolutely. It's CronosNow.com. It's scrolling on the bottom of our screen right there. Go to the contact us page, fill it out. get that strategy call with Richard. I mean, just that's valuable right there. And Richard, there's so much more to cover. We'll have to get you back on again
anytime
in a few months, because I mean, this landscape is always changing. The Amazon world changes every day in every aspect, and I can't even wrap my head around all the accounting stuff. So it's just great. But we'll have you back on. We'll dig into a little of these things, some of these things a little bit deeper. But thanks so much for jumping on, giving us this knowledge, letting us know how your service can help. It's been absolutely fantastic. And for everybody listening, if you like content like this, if you listen to this and you realized, oh my gosh, I've totally failed on my accounting side and my bookkeeping side of my business, this is huge information. If you want to learn more, listen to experts in this space, please go and like and subscribe to our podcast. Go to the Solozo page on Facebook and the Solozo channel on YouTube. Subscribe to those. Turn on notifications so you get notified when we go live with great people like Richard. And so you'll have all that information there. And also you can subscribe to our podcast on whatever podcast platform you listen to them. Richard, thanks so much for joining us. We'll be back at this again tomorrow, everybody. Have a great day.
Great, guys.